The gold prices have studied today as retreat in the dollar helps the metal stabilize after previous day's 1% decline. Ahead of the key policy meeting of the European Central Bank, on your screens it's 0.25% up for the gold prices, 12.90 holding. To the crude prices, where it's hovering around 107 for the Brent prices, most of those gains have been holding from the previous session. The Chinese customs data shows that the crude imports in the world's second biggest oil user jumped to a record highs. On your screens, 0.25% decline. We're just about holding below that 108 mark. Let's also get on board Mr. Shamik Bose, who's Executive Director, Commodity and Currency, Microsec Commerce, and he joins us live in Calcutta. Mr. Bose, hi, welcome. What's your sense really coming in for the precious metals now? Because we seem to be trading in that range. It's the rupee which is making the calculations go here and there in the Indian markets. But for a slightly medium term, longer term, how are you trading?
Manisha, in what you're saying is very correct, because it seems to be ranged between about 1180 and 1315. Slightly medium term, Manisha, unless it penetrates with some force on a weekly closing basis above 1340 and 1370. I don't see the technicals moving in favor. At the same time, if it threads below 1260, I think some more selling can take us to a still 1200. Technically, it seems very, very ranged, very subdued, dull, and a little weak. But fundamentally, it doesn't look very weak. In fact, it looks a little contradictory, with strong buying still there in emerging markets and not enough supplies. And a transfer, from weak hands to strong hands, from ETFs to sovereign buying. Therefore, fundamentally, in the longer term, I think end of the year we might get some traction towards $1480 and $1500. But before that, it needs to penetrate 1340 and 1370 decisively in the medium term.
Where levels those? Vijay, how are you looking at the trading patterns here, and especially for silver, what's your sense now?
Manisha, it's still looking sluggish, and I would feel comfortable buying closer to the 41,250 maybe. That too, if the price, open interest and traded volumes correlation suggest a buy. I would completely avoid the leverage space. I would focus on delivery segment. If the 41,250 does not imbibe confidence enough, then I don't really mind waiting till 40,250 to 40,500 range. I think the closer it gets to 40,000, the more likelihood of buying support coming in. So therefore, I'm in no hurry to write out a check on the buy side in silver.
Let's take a look at the base metal space now, and that really has been buzzing on the higher side. The copper prices are back around those 8 weeks high. The nickel prices are trading at a fresh 15-month highs as well. Vijay, how would you look at a couple of these?
Manisha, nickel has been a surprise, and I would add an unpleasant surprise for the simple reason that there are news reports of how a very crucial mine in New Caledonia might be temporarily shut down. Now, unfortunately for us, New Caledonia is responsible for approximately almost a fourth of the total global output of nickel. So you're seeing a spike up with nickel hitting a circuit up. Now, if you remember from a past history, if my memory serves me right, I think it was January 2012 when New Caledonia as an island was flooded, and therefore there were supply side constraints. Nickel remained at the upper end of the trading band for a couple of trading sessions together, hitting upper circuits. Although I would not say this is a replica, exact replica of that event, because the magnitude is somewhat weaker. I think it's telling you a similar story. So I would not be surprised to see nickel scaling up all the way to 1200 or maybe a little higher from there. I would seek short selling opportunities at an appropriate level, but at this point in time, the prices will be completely news driven, and therefore for the next 1 or 2 trading sessions, I would keep a watch. Where copper is concerned, I don't see, apart from nickel, I don't see any exuberance on my screen on any industrial metal. And where copper is concerned, I think the open interest expansion is indicating a build-up of fresh short positions. The closer it gets to the 418, 420 levels, if the open interest was to start accumulating, it would tell me that at those levels I just might add on to a few short positions.
Mr. Bose, what is your sense for the sector overall, and what kind of a metal are you picking up there between all of those fundamentals?
Well, picking up from what Vijay mentioned, what I find very interesting is some of the shipments of nickel to China have disappeared in the Malacca Straits and South China Sea. People are calling it piracy. Now, some people are calling it defaults, and some of the shipments have apparently caught fire. There's been some amount of insurance problems also in this sector. Given the overhang of copper and nickel in China, I think given the fact that many of them were using this as collateral, which I've mentioned before, I think given the price that stainless steel prices are not very firm in the OECD markets, and if stainless steel prices are going down and nickel prices are going up, it's a very interesting contradiction. Part of it is, of course, the fundamentals of the New Caledonian supply, but whether that can be sustained or not. And in copper, as you very well know yourself, Manisha, given the inventory in the shadow warehousing system with the investment banks and in China for collateral financing, it's very hard for me to tell you that this is correct price discovery area. You could be $500 up from here, you could be $500 down from here, but I'll stick to when it may sell and go away. I think you'll find 10% down from here in the next 2 to 3 months.
Would you say for that for the whole of base metal sector, or that's only for the copper prices?
Basically, I think copper is the doctorate, in the industrial metal sector, and if copper goes down, it will pressurize everything. But basically, deriving from what Vijay was mentioning about the fundamentals of nickel supplies, I think it's very strange that stainless steel is not doing very well, and the fundamentals of many of these metals, Manisha, are that, if they go up a little bit, say lead, zinc, they go up above $2,000 per ton at LME, the physical market writes in a discount, minus $50 to LME 3 months. But say aluminium is at $1,800 or wherever, it is at par to LME. If you're planning to do physical shipments around the world from ex-LME warehouses, that's why I'm not very bullish on any of them, but I think copper needs to go down for the others to be pressurized.
Your point on the steel prices is well taken, because the prices in steel in China especially are trading at the lowest level in 2009. In last 24 hours, we've seen steel prices decline the most in 3 months, and the output in China, of course, has been at record highs. Well, yes, so that really could be putting some pressure. Take a look at the iron ore prices also. Those have declined 21% in 2014 till time as well. So, yes, there is definite pressure in those ferrous metals. But to the energy space, and we have seen the crude oil prices continue to hold around those $100 per barrel mark. And Mr. Bose, would you agree that the fundamentals now more or less are more supportive than otherwise?
In crude oil, Manisha, I would say for Brent, the fundamentals are very supportive, given that geopolitics is a part of its fundamentals. The problems with Iran and Hormuz Straits haven't gone away. Problems with Egypt going into a presidential election with so much of turmoil. This thing that a speaker before on currency markets was saying Putin is on a conciliatory tone. This could, reverse just like that. It's very event-driven or news-driven, as you were mentioning. And I think the fundamentals are very much in favor of Brent oil. You could get a $10, $15 rally. If you remember 2 years ago, what happened with Libya when it rallied $15 in 4 days. But the fundamentals for WTI, driven by the shale oil revolution in America, Manisha, are not so supportive yet. So I think the spread will widen. But I've been wrong before on this count.
All right, before we go to Vijay for his take on the energy space, there is this flash on your screens which is coming in from the Sessions Court. Remember, it was yesterday that Jignesh Shah was arrested by EOW. And after that, today, this is the procedure really, that Sessions Court has sent Jignesh Shah and Shrikant Javalgekar to the police custody. For how many days? I think that is something we will have to wait out for. But this is a procedure. After arrest yesterday, after being taken in custody yesterday, this really is the next step coming in. But back to the space then, and that's the second flash as well, Shah and Javalgekar to remain in police custody till May 15th. So that really does mean 1 week. That's the 7 days that they have been taken in custody at this point in time. Vijay, what is your sense now coming in for the energy space? Because we've seen certain declines in the natural gas prices, and the crude prices in the meanwhile have been holding quite flat.
Manisha, the 6065 level I mentioned yesterday and day before is a near-term resistance as far as I'm concerned. Today also the intraday high is 6059. on the 19th May futures. If at all I get a price of 6050 or 6060, I don't really mind shorting crude. I'd keep a tight stop loss of 25 points. And my guess is crude is likely to come back down to the 59.75, if not 59.80. So between this range, I don't really mind taking some small gains from crude.
About commodities as well, and the Director General of ISMA, Abhinash Verma, explains how sugar mill owners remain tense as the government has not announced the amount of incentive for raw sugar prices yet.
There is substantial sugar in the country. There is no issue of shortage of sugar. A lot of contracts have happened in the month of March after the announcement of the notification of the government incentive, and therefore these contracts need to be executed in April and May. So there is a fear. There is an uncertainty in the minds of the millers as well as the exporters because the incentive amount is not being announced, and therefore personally I believe there should be about 3 to 5 lakh tons of raw sugar exports contracted for, which is not getting exported because of this delay and the uncertainty on the part of the government.
That's the view, of course, coming in from the sugar industry representatives, that the sugar incentive or export incentives have not been announced for this quarter, and that really is causing a bit of a problem there. The sugar prices in the meanwhile, remember, after that initial run-up from around 2,700 to 3,100 have seen some decline and consolidation as well. Mr. Bose, what's your sense now in this industry? I mean, it's quite fundamentally driven, news-driven as well. How would you look at the prices?
I think the prices, Manisha, are fair. You will have to watch for the weather here. It might add a premium to it a little bit. We will really have to see the carry-out stocks, Manisha. I mean, where do you see the carry-out stocks are? If they're not very good, and if this is indeed an El Nino year, then I think the sentiments will be positive. Sentiments will be rather positive. But otherwise, if the mill owners are already lobbying the government for some export subsidies, then it seems that their sentiments are pretty negative. Now, whether that's the reality or whether that's just public relations or lobbying, I don't know. It's hard for me to pin this down, but I think basically it seems where it is, and prices at $32 are pretty fair, I think.
Mr. Bose, what's your sense for other agro-commodities? Because something like a soybean is up 25%, corn is up 22%, something like wheat in the international markets also is up 23% for this year, and we still are tackling with that Ukraine issues, the weather concerns in India and otherwise as well.
Manisha, that's a fantastic question. You know, given the weather issues which has been prevailing in North America, especially in the USA since last year, the carry-out stocks, and you know, you're subsidizing corn for ethanol. Is corn food or is corn fuel? And a lot of countries around the world use corn as a basic, you know, food, the way we use rice and wheat. Mexico, Western African countries, Central American countries, they all use corn. And they all need American corn surpluses. But if that is being used or subsidized by the taxpayers as a fuel, that is off the market. And given the weather problems last year, the stock carry-out this year, all these prices will be firm. And once they start firming up with the fundamentals, the algorithm trading, the flash boys, you know, they can take prices very, very way up. That's the positive news. The negative news, China defaulting on 2 million tons of soybean cargo for one company, Marubeni, out of one origin in South America. So that's a very negative news. But the real, you know, what should I say, the devil's advocate here is, if this is going to be an El Nino year, these prices are not going to come down. This is just the beginning of the run. This is where the insiders are getting in. I think you'll find higher prices if El Nino is a reality and given the low stock carryouts.
Vijay, what is your sense in case of wheat prices? Because you have been advocating higher prices there. And also, what do you think of potato prices now?
Manisha, wheat I'm bullish on. The Saudis are likely to be the largest importers of wheat because they've stopped cultivating wheat in the desert. It's too water intensive for them to cultivate anymore. And that will lead to upward pressure in the international markets. I think over a period of the next 6 to 8 weeks time frame, I would be surprised if wheat did not cross 1600, if not 1620. So if at all prices were to decline from here marginally to the 1540 or sub 1540 levels, I would be a keen buyer on wheat in the next month futures. Where potatoes are concerned, I think it's now in a negative spiral. The exuberance has got punctured. It's still fallen on above average volumes. Open interest is getting cut, which tells you that the bulls who were a little too greedy for their own good are now surrendering their positions. And that procedure of surrendering positions still continues. The fact that the July, August and September futures were locked at a second lower circuit of 4% till the very end of trade tells you that tomorrow is going to be another bad day for the bulls.